Hello, good afternoon, everyone. It is Tuesday, November 23rd, 2021, 2:09 p.m. I'm here in Bangkok, Thailand, and I'm going to break down Gbpjpy. Let's get started. Right now, we're looking at the weekly time frame, and as of right now, we can see that a few weeks ago, Gbpjpy had broken out into a new bullish trend. All I was waiting for was a break of 156.8, and price did break that and close above. So I want to mark that up for reference, and I'm going to go forward after that. I'm going to zoom in now and explain the scenario as to what happened after that breakout. So GJ did run up. It did close bullish for that week, and that was the week of October 10th, 2021. So it was last month. After that, of course, after every breakout, there is a retest. So what did price do? It went back down to retest the supportive region from where price was breaking out. So we can see there was about a 700 pip breakout within a 2-week move. So price definitely has quite a deep retracement, and it did happen shortly afterwards. As you can see, price had retraced about 524 pips. I'm not going to draw a Fibonacci zone on this one because it doesn't really make too much sense. So I'm going to just mark that off as a reference. I also want to mark off a support zone down below. So if we look down below, we do see some support action down below, and that's about another 469 pips away. So technically, it is still bullish, but it's bullish within a very wide range. And of course, unless you are a long-term position holder, it doesn't really make sense to be holding a buy based off of this breakout. Although your fundamentals may be on point, your technicals are not. So let's go into the daily and look a little bit further, see where we got. On the daily now, and this is a little bit more detail of what happened. So this is just breaking down the couple weeks that led into that breakout, and as you can see, there was no support at all during that couple weeks of breakout. So what had happened was bears found opportunity and took it down, exactly what they did. And it actually went in for a retracement. So now I will draw a Fibonacci zone and show you all the 0.618 rejection. Here we go. Fibonacci is drawn. 0.618 has been respected, and it is currently testing that zone, attempting to break out to the upside. So for me to resume the bullish trend, I would like to see a 38.2 broken, and a 300 pip rise would be my first target for a bull run. Wait for a close above these highs, and then take it on up to the long-term target. I go back out to the weekly just to show you all where the long-term target is. It would be about another 170 pips away. So if and when that comes, we'll follow through. But as of right now, I'm focused on the bears. So like I said, it went back for retracement. And so if price is currently retracing on a daily time frame, on an intraday basis, we're looking for bears. We're looking for shorts. And there can be days when we can go long because long term I am bullish. So whenever I do find a supportive region and an opportunity to buy it, I will. But we just had a very bullish past day. So when I go into the 4-hour time frame, you can see that on the 19th, which was the end of last week, price did close bearish. I highlighted this in my previous video. After that, we did see a bounce off of the supportive region, and it failed to close below. I did break this down in my previous Gbpjpy video. If you did not watch that, please go forward and watch that before continuing on with this. But let's move forward. Price did break. It did break back above. So rejected, had bullish engulfing, and this is an evening star right here, shooting star candle, and it went up about 85 pips as of now. So what happened at that point? Price failed to close above highs, and if it did close above highs, then we would have considered it a continuation of the bull trend. So until price does close above the highs of 154.9, I will continue to look for shorts. Let's go into a smaller time frame, but before we do that, I want to mark off any area of value that I see before I go down. I see a region right here around the 50% line I'd like to mark off, and then I see another region right here down below 152.5. So this is a region that I'd be looking into for a possible rejection back to the upside. And knowing that, I would not buy price right now and hold it 119 or whatever pips, because that's too much pips for me to be holding out on as a day trader. So now let's look into the 30-minute time frame as we work our way down, and we can see that price, you can just see more detail of price action from the 19th of November, the false break to the downside, and then we see a steady incline up. For the beginning of the week, we did see a healthy uptrend, but this healthy uptrend is now being challenged by resistance above. I'm going to mark this off right here as a minor area of resistance. So if we mark the chart like this, you can see that there is a potential minor area of resistance, and that minor area of resistance is actually pretty thick. So it is a thick area of resistance that price has to break out above. We look at right here, it's about 25 pips. So we can see price break above this 25 pip area. We could potentially see it climb up further. But until then, we will look for shorts. So what is happening now on this 30-minute candle is a big bearish drop. It's dropping into support of yesterday's highs, and it is currently testing the highs of yesterday. So if it breaks below this supportive region around 153.7, 153.6, we could see potential drive all the way down towards 153.2 and possibly even 153.20. That's about a 70 pip drive. This is what I'm projecting for the day, but I do believe that it might settle a little bit higher up. So if there's any more areas of confluence that I'd like to mark off before I go into lower time frame, I'm going to do that now. Mark a trend line or a Fibonacci zone. And as we can see, price should be continuing on its way up. This was yesterday's move. It's testing the 23.6 zone, and I will look for an entry at the break at 153.7. As you guys can see, it's about 19, 20 pips away. So that will be my entry for a bear run. So I'm going to put a sell stop down below. So once again, my sell stop is around 153.7. That is going to be my entry for the day. Now here's the problem. My entry for the day might be a little bit late. As you guys can all see, it's about 50 pips away. Gbpjpy only moves about 100 pips a day on average. If you take the ATR and you multiply it by the 31 days per month on average, you can see that it moves about 100 pips a day. So knowing that by the time it reaches my entry point, it's about to be halfway there, I'm only going to aim for another 40 to 50 pip target, and that's going to make it 100 pips. So right around the point where I set, 153.29 is going to be my target for the day. So I marked that up right there. And this is going to be the entry, the exit, and now I have to find a stop loss. My stop loss is simply going to be right above these highs. We don't really have to worry about it if price does go down there because momentum will carry it. So 154.294 or 154.3 is going to be my stop loss. It's rounding up to the psychological area of 154.3 and leave it there. So now we have the swing position for today, but now I'm going to discuss managing this position and what I will do along the way on an intraday basis. So this is the signal just for those of you that are just trying to take a swing trade on a, it's about, let's see, beginning about 42 pips with a 59 pip stop loss. It's not the greatest reward to risk ratio, so of course I myself is going to be looking for entries a little bit sooner so I can have a better R&R. So when I do look into a smaller time frame, I could go into the 15-minute, but I did cover in my last video that I sometimes combine the 15 and hourly to get and use a 30-minute instead. So let's go into the 5-minute. This is a scalper's time frame, so if you're not really familiar with scalping, I'd stay away from the 5 minutes. But if you're ready for this next level, then definitely hop down to the 5-minute time frame and you can see more price action. As of right now, we do see prices melting. It's melting, melting, melting. We're about to enter London Open, and London Open should have enough volatility and momentum to crash down and carry price all the way down to my target point. Now I will definitely just monitor this price. I actually have to say that I was watching this pair a few hours ago, and I already projected that if price were to close below 153.9, we would see a bear drive to the downside for the day, and actually I would have been in already. So I technically, as a scalper, I would have already been in the trade already, and my stop loss would be slightly above, around 154.3 still. So this would give me a stop loss of about 34 pips and a target of about 67 pips, which is a 2-to-1 reward to risk ratio. That is awesome. And now I'm going to discuss scaling in. So we see price is currently testing the lows of this trend right here. When I do draw another fib, I want to actually erase the last fib so I can clear up some noise in the charts. I draw this fib, new Fibonacci retracement right here. And we can see it's testing the lows of this right now. So a nice entry to scale in on a scalping basis would be right around 153.7, which is about 7 or 8 pips away. But because it's so close to my swing entry, I'll just leave this alone and just wait for price to trigger my entry and continue its drive down. Another thing that could happen, since it's at a low of this trend, it could possibly bounce back up and retest the highs of the origin of the drop, and that's what I'm assuming. So instead of me taking a trade right here or right here and it being so close to my entry, I actually split my position up into threes. So I plan on trading with a 30 lot total, but I'm doing 10 lots at a time, and my next entry is basically going to be a rejection off of resistance area above. The resistance area above that I'm looking at is about 154.06. So when I do draw a minor area of resistance, it would be marked off around right here. So I will wait for price to actually bounce up about 15 pips, reject this candle area. It could possibly go up a little further and test this zone right here between 154.1 and 154.0, but I don't really foresee price going up any further than that. And if it does, then like I said, stop loss is slightly above because it's invalid. Whoa, whoa, whoa. This is getting real close, guys. Getting real close to entry. But this is all I have to do. That's all I have to highlight for this video. Wait for the close. This is a stop run. What I mean by that is sometimes price will go down, trigger stops prematurely, and then drag it back up to stop out any sellers that have tight stops. But let's watch. Let's wait. This is my video for today. I am short Gbpjpy. I'm going to run it down for about 35 pips. If price can continue to go down further, I'll continue to trigger it further. Hopefully you guys got a great understanding of this video, and if you have any questions, just send me a message and I'll follow up with everyone online, on my Discord, and on my Instagram. Trade safe.